Class 12 Accountancy Numerical Problem Solutions, presented by NCERT.com. In this video, we are going to provide reconstitution of a partnership firm, admission of a partner, problem 22 solution. The problem statement is as follows. Aditya and Balan are partners sharing profits and losses in 3:2 ratio. They admitted Christopher for 1/4 share in the profits. The new profit sharing ratio agreed was 2:1:1. Christopher brought 50,000 rupees for his capital. His share of goodwill was agreed to at 15,000 rupees. Christopher could bring only 10,000 rupees out of his share of goodwill. Record necessary journal entries in the books of the firm. So, as per the problem, we have to record the necessary journal entries. And in this problem, the existing partners have admitted a new partner, Christopher. So, basically, this problem requires journal entries for the following scenarios. The first one is to record the capital and goodwill premium brought by the new partner. And the second one is to distribute the goodwill premium brought by the new partner. Whom should we distribute this goodwill premium? It should be distributed to the old partners in their sacrificing ratio. Let's consider each of these scenarios one by one. Let's start with the first step, wherein we have to record the capital and goodwill premium brought by the new partner. Now, it is given in the problem that the partner Christopher brought 50,000 rupees as capital. See, when the partners bring in the capital, they usually bring it in the form of cash. So, it increases the cash asset available with the business. So, we should debit the cash account with 50,000 rupees. At the same time, as this is the capital brought in by the new partner Christopher, it creates the capital for the new partner in the firm. So, we should create the partner Christopher's capital account with 50,000 rupees. In addition to the capital brought in, the new partner agreed to bring his share of goodwill, which is 15,000 rupees. But for some reason, he could not bring all the 15,000 rupees of goodwill. He could only bring 10,000 rupees out of his share of goodwill. So, what should we record in the premium for goodwill account? Is it 15,000 rupees of agreed premium for goodwill or 10,000 rupees of premium for goodwill amount brought? See, he brought only 10,000 rupees. So, we should record only the amount of goodwill brought. This goodwill premium brought in is also in the form of cash. So, it also increases the cash available with the business. So, we should debit the cash account with the goodwill premium amount brought, which is of 10,000 rupees. I repeat, it is 10,000 rupees of goodwill premium brought, not 15,000 rupees of goodwill premium agreed upon. At the same time, as this cash is received as the premium for goodwill, we should create the premium for goodwill account with these 10,000 rupees. Again, note that this is not 15,000 rupees. Note here that overall the cash account should be debited with 60,000 rupees. With this information at our disposal, let's now proceed to record this transaction. Let's first write the journal header. Let us have the rest of the journal format. Let's first write the cash account as the debit entry. Let's then write the text DR to indicate that this is a debit entry. Let's then write the debit amount of 60,000 rupees in the debit amount column. Leaving some margin, let's write the partner Christopher's capital account as the credit entry. As you know, the credit entries start with 2. Let's then write the credit amount of 50,000 rupees in the credit amount column. Let's then write the premium for goodwill account as the next credit entry. Let's then write the credit amount of 10,000 rupees in the credit amount column. Let's then write the description or narration of this transaction as being both capital and premium for goodwill brought in by the new partner Christopher. Let's then draw a line to mark the completion of generalizing of this transaction. With that, we have completed the generalizing of this transaction. So, as we have already discussed, the next step is to distribute the goodwill premium to the old partners. See, if we don't know the sacrificing ratio, we distribute the goodwill premium among the old partners in their old profit sharing ratio. But here in this problem, we are given both the old and new profit sharing ratios. From this, we can find the contribution to sacrifice, and from that, we can find the sacrificing ratio. We can calculate the sacrifice using the formula old share value minus new share value. Just to remind you, the old profit sharing ratio of the existing old partners is given as 3:2. And after joining the new partner, all the three partners share the profit in the ratio 2:1:1. Let's capture this here for reference. Old profit sharing ratio is 3:2. New profit sharing ratio is 2:1:1. Now the sacrifice made by the old partner Aditya is equal to his old share value 3 upon 5 minus his new share value 2 upon 4. Considering 20 as LCM, the numerator will have 3 4s are minus 2 5s are. This is equal to 12 minus 10 whole upon 20. This is equal to 2 upon 20. Let's not simplify this further. Let's leave it as it is. Having the denominator as 20 will help us with cancellation while calculating the sacrificing ratio. And then the sacrifice made by the old partner Balan is equal to his old share value of 2 upon 5 minus his new share value 1 upon 4. Considering 20 as LCM, the numerator will have 2 4s are minus 1 5s are. This is equal to 8 minus 5 whole upon 20. This is equal to 3 upon 20. So the sacrificing ratio of the old partners is equal to 2 upon 20 is to 3 upon 20. Let's cancel 20 in both the denominators. So this is equal to 2 is to 3. So the goodwill premium agreed upon by the new partner Christopher, which is equal to 15,000 rupees, should be distributed among the old partners in the ratio 2 is to 3. There is one thing that we should pay special attention here. We have to distribute the agreed upon goodwill premium, which is 15,000 rupees. It is not the 10,000 rupees of goodwill premium brought in by the new partner Christopher. Now, if the new partner has brought only 10,000 rupees of goodwill premium, how can we distribute 15,000 rupees of goodwill premium among the old existing partners? See, if the new partner does not bring in all the goodwill premium, the balance will be adjusted from the capital so that the agreed upon goodwill premium amount of 15,000 rupees can be distributed among the old existing partners. You have to keep this in mind while proceeding with this step. So, the goodwill distributed to the old partner Aditya is equal to the goodwill premium agreed upon by the new partner Christopher, which is 15,000 rupees multiplied with the sacrifice share of the old partner Aditya, which is 2 upon 5. Cancelling with 5, 5 ones are, 5 3,000s are. Now, if we multiply the remaining 3,000 rupees and 2, we get 6,000 rupees. This is the share of the old partner Aditya in the goodwill premium brought by the new partner Christopher. Now the goodwill distributed to the old partner Balan is equal to the goodwill premium brought in by the new partner Christopher, which is 15,000 rupees multiplied with the sacrifice share of the old partner Balan, which is 3 upon 5. Cancelling with 5, 5 ones are, 5 3,000s are. Now if we multiply the remaining 3,000 rupees and 3, we get 9,000 rupees. This is the share of the old partner Balan in the goodwill premium brought by the new partner Christopher. For distributing this goodwill premium to the old partners, we should transfer this agreed upon goodwill premium amount to the old partners' capital accounts. See, these 15,000 rupees comprises of 5,000 rupees of capital adjusted from the new partner Christopher's capital account. So, we should debit the partner Christopher's capital account with 5,000 rupees. And the rest of the 10,000 rupees are taken from the premium for goodwill account. So, we should debit the premium for goodwill account with 10,000 rupees. At the same time, as this goodwill is transferred to the old partner's capital accounts, we should create the partner Aditya's capital account with 6,000 rupees and create the partner Balan's capital account with 9,000 rupees. With this information at our disposal, let's now proceed to record this transaction in the journal. Let's first write the partner Christopher's capital account as the debit entry. Let's then write the text DR to indicate that this is a debit entry. Let's then write the debit amount of 5,000 rupees in the debit amount column. Let's then write the premium for goodwill account as the next debit entry. Let's then write the text DR to indicate that this is a debit entry. Let's then write the debit amount of 10,000 rupees in the debit amount column. Let's then write partner Aditya's capital account as the credit entry. Let's then write the credit amount of 6,000 rupees in the credit amount column. Let's then write partner Balan's capital account as the next credit entry. Let's then write the credit amount of 9,000 rupees in the credit amount column. Let's then write the description or narration of this transaction as being goodwill premium agreed upon by the partner Christopher is distributed to the old partners Aditya and Balan. With that, we have completed the journalizing of this transaction. And with that, we have come to the end of the solution to this problem. Thanks for watching. Edixit.com is started to promote effective and efficient learning process to help the students with their learning requirements. To watch all our videos, please subscribe to our channel. Also, please click on the bell icon to receive a notification as soon as a new video is published. Please click on the like button if you like this video. Thanks for watching.